Everyone's talking about Melbourne, but that doesn't mean you should just invest wherever. You need to know what area will give you the best bang for your buck and make a good long-term investment. In this video, I'm going to show you the exact Melbourne suburbs that meet this criteria, where the demand is peaking, supply is shrinking, and prices still have serious room to grow. I'm Tien, co-founder of Invest and Grow Property. I'm also a qualified CPA and finance director who's helped facilitate over $40 million in property transactions. In the next 10 minutes, you'll see exactly why these Melbourne suburbs are outperforming others, what the data is telling us, and how to use it to your advantage as an investor. Make sure you stick around until the end. The last few suburbs on the list have some of the most exciting metrics I've seen in months. Let's get into it. Melbourne has hundreds of suburbs under 900,000. The challenge though is finding affordable options but identifying where the opportunity actually sits. So before I show you these suburbs, let me tell you exactly how this data works and why it matters to you. First up is typical property value. The typical price is a modeled estimate of what an average property, given in a suburb or area, would be expected to sell in this current market. It takes common property characteristics into account, such as the number of bedrooms and bathrooms, the land size, the location, and recent comparable sales. Second is stock on market percentage. This basically shows you how supply versus demand is tracking. Less than 1% is considered strong, while more than 2.5% is weak. You want to hit somewhere in between. Next is days on market. The longer properties sit on market, the slower the buying trend in the suburb. This dictates buyer demand, and you want to identify markets sitting at less than 30 days, or between 30-60 at the least. Then we look at vacancy rate, which reflects the rental demand in any given area. Less than 1.5% is really strong, while more than 3% is considered a little weak. Finally, gross rental yield. The yield is your cash flow potential as an investor. You want your property yield to set around 3.5 to 6%. These metrics measure what's happening right now and not just what might happen in 5 years. And this is your biggest opportunity. Now you know how each of these metrics work. Let's take a look at how to use them to identify the 8 Melbourne suburbs that should be on your radar. Let's start with Frankston. The typical property value here is $877,300 with 28 days on market, which is trending downwards. That's important because it shows properties are getting snatched up quickly. In fact, the stock available on the market just sits at 0.55%, which is extremely tight. Plus, the vacancy rate is under 1%, which means your property won't sit empty, and a 3.73% yield gives you steady rental income while you wait for that capital growth. Frankston is also known as the last beach city for Melbourne, with coastal living and plenty of public transport accessibility. It's also getting a major infrastructure upgrade, which will improve local amenities across the board. When you compare it to inner Bayside suburbs, it's still relatively affordable too, which attracts buyers' interest. Next is Cranbourne at number 2. This suburb attracts a typical value of $727,400. with 32 days on market and also dropping. With only 0.84% stock on market, a 1.65% vacancy rate, and a 3.8% yield, the suburb shows tight supply, strong rental demand, and balanced returns. All of this is a solid indicator of a growth-focused market with stable cash flow potential. Cranbourne also sits in Melbourne's southeast growth corridor, so it gets all the benefits of continued development, infrastructure extensions, and expanding services. Plus, this suburb is still in expansion mode, which means there's room for both capital growth and rental demand to strengthen. If you're targeting growth corridors with strong infrastructure backing, Cranbourne ticks all the boxes. At number 3 is Werribee, with a typical property value of $681,500. The average days on market rate sits at 35, still trending downways, with stock on market resting at 1.54%. The vacancy rate of 2.12% is also dropping, while the yield is at 3.81%. While the vacancy rate is slightly higher than the others, it's trending downways, which is what really matters. Because Werribee is part of Wyndham, it's within one of Melbourne's fastest growing local government areas. So the population is expanding rapidly, jobs are increasing, and capital is flowing into the region nicely. Werribee is also the perfect combination of affordability and growth potential. While it's not the cheapest on the list, it's in a council area that's seeing serious investment. If you're looking for a suburb with strong LGA fundamentals and a clear growth story, Werribee should be on your radar. Number 4 on the list is Melton, with an average property value of $557,200 and 31 days on market. And it's dropping quickly too. You'll find 0.9% stock on the market here, with vacancies already falling from 2.20%. The yield here is the highest we've seen so far at 4.16%, meaning strong capital cash flow territory. Melton is also being folded more tightly into Greater Melbourne's urban footprint, indicating it's becoming less fringe and more integrated. Even better, population forecasts suggest Melton may more than double by 2050, which means infrastructure, jobs and services will follow. Number 5 is Epping. The average property price in Epping is $759,200 with 30 days on the market and also trending downways. The stock on market figure is 0.65% and a vacancy rate of 1.34%. This tells us the tenants are locking in quickly and properties aren't sitting empty. The yield is just under 4%, which is a nice balance between growth and cash flow. Epping is about 20 kilometers north of the CBD, making close enough for convenient access, yet still offers that space and lower entry price point you get in other suburbs. Plus, the suburb has strong local amenities like the Pacific Epping Shopping Centre, good schools, open spaces, and sport facilities. If you're looking for a suburb with strong infrastructure, family appeal, and really tight rental conditions, Epping delivers. Up next at 6 is Craigieburn. Here, the average value is $743,200 with a 33 days on market, also a downward trajectory. The yield of 4.14% is attractive for cash flow investors, as is the stock on market rate of 0.89%. You've also got a vacancy rate of 2.13%. What's interesting here is that house rents grew around 10% in the past year, giving us a strong signal that this is a winner to invest in. Plus, within the established precinct, the limited new housing supply means infill homes and well-positioned properties are attracting premium interest. If you're targeting northern growth suburbs and strong rental growth and limited new supply, Craigieburn is worth considering. Now, if you thought the immediate Melbourne area is the only place with good investment potential, the next 2 suburbs sit in the Geelong region. So next on our list is St Albans Park, which sits about 5 kilometres southeast of Geelong CBD and has a typical value of $690,900. This is one of the tightest markets on the list, with properties lasting 29 days on the market. Stock on the market at 0.37% also means there's basically nothing available. With a vacancy rate at 0.47%, rental properties are being snapped up immediately too. This is a big sign of strong, stable demand in a family-orientated suburb. For those looking to leave Melbourne for lifestyle and affordability, St Albans Park offers all that right next to the Geelong CBD. It boasts plenty of established infrastructure and a tight supply-demand dynamic you really can't beat. If you're open to investing outside Melbourne and want a suburb with rock-solid fundamentals, St Albans Park is exceptional. And finally, at number 8 is Corio. This suburb has a $582,100 average property value with 30 days on market, which is actually still dropping quickly. The vacancy rate of 1.04% shows strong rental demand, and with stock on market at 0.55%, sellers are in control and are enjoying a 4.24% yield. Corio is also one of Geelong's more affordable northern suburbs, and is quickly getting a lot of attention from both investors and first home buyers. There's also redevelopment activity on the cards and proximity to transport. If you want affordability, strong yield, and exposure to Geelong's growth without paying premium prices, Corio is a standout. So there you have it, 8 Melbourne and Geelong suburbs with serious market tightening across supply, rental demand, and room for growth. Best of all, this data is based on live metrics that reflect exactly what's happening on the ground right now. So don't wait for a suburb to be labelled a hotspot. These suburbs are primed and ready for investment now. Don't miss your window. If you'd like to chat about your situation and see how Invest and Grow Property can help you find serious investment potential in suburbs just like these ones mentioned today, book a free strategy call with us. The link is in the description below. And if you found this video helpful, make sure you hit like and subscribe. Thanks for watching and see you in the next one.